We're in the final module of Edge Trading Academy. I have some final advice for you that I want to divide between a few sections. In this section, I want to talk about the top 5 things you should avoid. These are the top 5 things that failing traders do that completely sabotages their own trading, so don't do them. The 5 things to avoid are overtrading, overconfidence, overleveraging, overexposure, and overriding stop losses. The first one we're going to talk about is overtrading, which basically means trading too frequently or trading too large of trades or uncalculated risks. We know that successful traders are very patient and wait for the best setups to capitalize on. You will definitely know if you're overtrading because you will feel like you're just forcing trades and you'll close out of those trades in a loss and know you shouldn't have placed those trades in the first place. You also don't want to get trapped in what's called revenge trading. This is when you have some losses in a row and you have the urge to get revenge on the market. So you get back into a trade right away, hoping to get a quick profit. I've gone through this personally and know the feeling, and it just results in losing even more money. So to avoid revenge trading, just make sure you stick to your trading plan. That seems to be the answer to everything, right? So once you feel any emotions taking over, like anxiety or fear or greed or impatience, don't start taking trades. You always want to trade with your mind, not your emotions, and stick to your plan 100%. Remember, this is a long-term game and a few losses is normal. Just stay patient and always stay focused on the process of trading with your trading plan. The next thing to avoid is overconfidence. And this is basically being too confident in your own trading skills that you take too high of risks once you think you win all the time. We want you to be confident in yourself, but not overconfident. Overconfident traders think they are better than other traders and overestimate their abilities and knowledge of the market. This is why it is so important for you to understand yourself as a trader and what you are capable of. You need to be aware of the trades that aren't worth taking and what your limitations are. Just always consider that you could be wrong and try to pay attention to evidence in the market that could suggest so. The next mistake is over-leveraging. A beautiful thing about the Forex market is the opportunity to use leverage, or in other words, trade with large amounts of money with just a small amount of capital in your account. This helps you to make big gains even if you don't have a ton of money to start. But the disadvantage is you can blow your account if you aren't careful. The higher your leverage, the more conservative you need to be with your trades to protect your account. Traders get into trouble when they search out the highest leverage possible and start taking risky trades to try to get rich quick. As you begin trading, you'll learn which leverage is best for you to help you achieve your financial goals. When using any amount of leverage, trading with caution should be your priority. Next, we have what's called overexposure. Overexposure is when you have multiple trades open with different currency pairs that are correlated. Remember this section on correlation between pairs? If you're in 2 trades on separate pairs that are very positively correlated, it is as if you open 2 trades on the same pair. This obviously increases your risk, so it might make more sense to choose just one of the positively correlated pairs to trade, especially as you're getting started. That way you don't accidentally expose yourself to more risk. The last and final advice I have for you on things to avoid is overriding stop losses. Oftentimes, and this is especially with new traders, when they're in the market trading, emotions take over, and as they see their trades getting closer and closer to their stop loss, they think, I'm going to move the stop loss further away because I know it is going to start heading the right way anytime now. Do not do this. Never widen your stop loss. You should already have your stop loss or exit criteria determined before entering any trades. You should have that criteria written down as part of your trading system, and you just need to stick to it. If not, you will just be guessing and gambling. So never override or remove or widen your stop loss. Take the loss and move on to the next trade. So these are the top 5 things to avoid from the very beginning. Do your best to avoid developing any habits revolving around these 5 things, and it will help save you a lot over your trading career.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.